Western Union is awesome because we have economics, we have distribution. It's perfect for that. I think as others start looking at this, they really should look at how they drive those two sides of that divide, because it's very difficult in any ecosystem to be successful if you don't drive the economics, you don't have the distribution. Because if those don't align, or those use cases don't align, then whether it's stablecoin, emojis, or NFTs, it's very difficult to be successful.
You're listening to Season 6 of Stableminded, powered by Rain. Rain helps financial teams build and manage stablecoin-powered card programs. With a single API, Rain lets you issue branded cards and unlock new revenue. With Rain, users can move, store, and spend stablecoins instantly and compliantly in over 150 countries. Join us this season to explore how Visa, Crossmint, Yellow Card, Arculus, and the state of Wyoming are embedding stablecoin flows into their business. You can learn more at rain.xyz.
Malcolm, thank you for coming on Stableminded this season that we're covering, diving into the rise of stablecoin card payments. There's been no shortage of exciting news around Western Union with the launch of your stablecoin and now the partnership with Rain. So welcome on. Thanks for coming on the pod in such a short notice.
I appreciate it. Look, this is a great opportunity to talk about what we're doing, what we're working on. So yeah, happy to be part of this.
Awesome. So, I'm looking at your background. It looks like you're a little bit newer with Western Union. It sounds like you're like 6 to 8 months into the role, but it sounds like you're the lead. You're the stablecoin guy coming into the organization. I'm really curious, what has your journey into the stablecoin blockchain payments rails? Were you working on previous projects? How did you pivot Western Union on going down the route? What's that journey been like?
It's been an interesting one. And I started, in the original blockchain space back in my days in Canada with TD Banks. At that time, we were doing tokenization with R3 Corda. The use case of, how do you token value was certainly a use case that was big. Before that, I spent a bit of time at Kick, where they did their ICO, their coin offerings, which were on the Kin Foundation. So you were going back right to those days. And in Canada, building out a digital asset network around identity. So the two-party network of how you move identity through a blockchain with Hyperledger. So always been in and around that space, then moved away from that with Zelle and staying in that identity space, and then through Disney working on identity profile, and then landed at Western Union really to look after their ecosystems, so the wallets, the embedded finance products, and now ultimately the stablecoin piece. So it's been a journey where popping in and out of that space and really keeping up with with what's happening. And this is certainly an interesting turn with the Genius Act and things of good timing, as they say.
So it's interesting, your background. You said it was mostly digital identity.
Yes.
For me, obviously we're focused on stablecoins, even going back to digital identity, when we kind of talk about fringe use cases and really a lot of, it's interesting to me that was the predecessor for you to stablecoins. Why do you think you went down the route first of digital identity versus money movement? And I guess my guess would be is, at the end of the day, blockchains just help data move better. Is really that the root of it?
Yeah, so you're absolutely right, and I think there's two large components to that. So at the time, I was responsible for all the payments in TD Bank, a Canadian bank. Identity and payments are synonymous with each other, so there is a huge amount of fraud in the system with payments because of the requirement to prove you're present and you're also who you say you are. So part of that journey is really, okay, if you can get a strong identity within a chain and you can make it immutable and you can share it openly as a privacy asset, and then you link it to a payment token, then you bring the security of the identity to the token. So that's really how the journey started, very much embedded in payments and starting with those use cases. And I think like everything, these things hype cycle, which is really interesting. The next hype cycle was, hey, we're going to do NFTs, and that it was going, and then stablecoins has always popped around. We've always had, the Bitcoins and, that side of it, and the ICOs came through. And I think what's interesting now is stablecoin, it's all based on the same foundational piece as you suggested. You're moving a digital asset, you're putting it into a blockchain because it has relevance to do that and move that globally in that respect. That's how those pieces come together. It wasn't so much of, hey, I'm picking to move into this journey now because stablecoins is buzzword. It's just the evolution of, hey, we need to move digital assets. Payments are still moving predominantly and largely on the fiat rails. They're still moving in the ways that, everybody writes about. It's slow. It's not 24/7 liquid. All those things. So, Corda, when we were doing the stuff with R3 Corda and the Banks of Canada, that was really predicated on this. Like, how do you move 24 liquidity in a smart contract on, between two parties instead of moving it through a fiat chain? So it's really the same concept of tokenization.
That's really interesting. What about your personal journey? We talk a lot about on the show how people's professional careers has evolved to go down this route. But what about you personally? Was there ever the times where you were starting to engage with this technology and then it bled into your professional life, or was it always, was it just early days where your professional career had to take you?
Yeah, I think, sometimes you just happen to be working on interesting things at the right times. My professional career has always been, technology, big complex projects, big complex problems. So if you really start with, okay, what is the complex problem you're trying to solve? So you work in a large bank, you have a fraud issue. So we have a fraud issue. That's the problem statement. You have consumers and customers that want to be protected and they want to trust you. So if you start there and you start looking at, okay, how do we solve that with technology, or how do we solve that with approaches? Then you start looking at those innovation things. And that's really how that personal journey starts. It's like, okay, what are we trying to solve? And I think it's very easy to try and bring technology to the market and say, hey, we have a technology approach here. Let's go and build the stage and everyone will come and play. I really started on the other side. And again, a little bit of luck in your career. You end up in a large bank running payments and, you're starting to look at how you apply identity to payment tokens. And there's some new companies doing some stuff. There's some interesting conversations going on. These conferences around, there's quarter conferences where you bump into people. And then the ability to connect those dots and say, well, if I applied this technology and this thinking to this problem and you bring them together, does that give you a better outcome overall? So that's really how I evolved in this from a career point of view. I think, from the personal side, I think I'm a bit of a narcissist and I really go after big complex problems. We see my career move quite quickly through organizations, and Western Union, through a colleague who I used to work with actually in Canada, approached and said, hey, we're doing some really complex things and you're a bit of a narcissist. Do you want to join me here? And I'm like, sure, why not? What could possibly
challenge?
in this? And it's proved to be a huge amount of fun. Like Western Union it's a company that's over 170 years old. That known for moving money. They're known for building the original payment networks. Certainly in my time here, I've learned the incredible size and breadth of the network they have. And if you apply that concept of complex problem solving solutions, there really is this network that is a global network with consumer endpoints in retail that it's just it's huge. It's like, it's got such scale on it. And you're like, okay, so if I have this, I have something like a stable coin and I have liquidity I move today in fiat, applying those together, what outcome do I get? Taking that concept of just being in the right place at the right time and then putting the things together and getting a better outcome, it really lends itself to why I ended up in this position.
That's interesting. I do want to dive down the route of the problems that you're solving at Western Union, but what you've said this term a few times, payment tokens. Would you say that those are different in the way that you think about stable coins? Is it an interchangeable term? Is that one that's more used on the enterprise side of things? Because in my world, like I write a lot. I don't think I've ever thought to use the term payment token when I'm writing. How would you explain that to just a novice consumer?
Yeah. So, and I think we'll get into a novice consumer because that's a really interesting theme of how we're thinking about this problem and how I'm personally thinking about it. So the payment token term comes from how we're branding the Western Union stablecoin. So we did some thinking around, okay, do we call it a Woo coin, W coin, like Woo coin? Do we really leverage our brand? Do we, call it a coin itself? And there's a couple of premises that you play out here. So one is, I personally believe tokenization is going to do to the financial industry what AI is doing to productivity. So the shift in AI where it's taking speed, productivity. The things you do now take seconds or hours, like research is so much easier. You're writing scripts, doing whatever you need. It's going to do the same to the financial industry. So again, if you take the premise that everything is going to become tokenized, and tokenization is where we're moving, whether it's gold or whether it's, stocks or whether it's commodities, then payments are going to tokenize as well. So I think stable coins are, in my mind, starting to evolve towards tokenization. At the end of the day, it's a digital asset. So whether we call it a stable coin or a payment token, and that really led into using that payment token, USDPT version of that. It also means if we see a time where Mexico has a stable coin or Europe has a stable coin that we want to move after, we can use the PT and then just add the currency before it. And it starts giving us that global ubiquity. Versus coin doesn't translate as well. Now, again, we're an institution. We move large volumes of fiat around between our partners, our agents, which are our internal partners, and our consumers. So tokenization of that is really the theme that plays out in mind, if that helps.
No, that actually, like I said, if I was a consumer thinking about it from that perspective of coming into an app and I just see, oh, this is a payment token, this is a payment mechanism, that immediately lowers my guard compared to, I talk with friends and family, and even the word stablecoin, immediately coin goes to crypto and then you start to lose them.
And stables are interesting, and I can't possibly claim this is mine, but I was talking to someone and I can't remember who. It's funny, we call it stable, but it moves really fast. And I'm like, actually, that's quite funny. When you really play that through on the wording, you're like, oh, that's interesting. Yeah. Stable literally means still. And yeah. So I agree. And I think I never actually thought of it that way. And that's a good call out. Payment token does lower that. I know what payment is, and I know a token is something I put in a machine. Yeah. It does feel a little bit more consumery potentially than stable coin. I've not thought of it that way, but I'm going to use that in every single meeting from now on.
Yeah, or even somebody I saw on LinkedIn one time is like, stable coins aren't actually stable because they're pegged to fiat currency that's devaluing. And I was like, there's a point there, especially when you're working with USD. It's an inflationary currency. We're comparing it against other currencies. Does it really speak to the utility of the underlying asset? Probably could go down a whole rabbit hole now. What do you call yield bearing tokens?
Yeah,
what do you call the ones that it's really a tokenized hedge fund? There's definitely a need for.
It's funny because you mentioned the word utility, and utility is really important in this. And I think that's where payment is a utility. So if you think about what we're doing, whether it's consumer or internally, that utility is really what we're providing. And if it's not utility and it becomes complex or you put barriers into it, you just don't get adoption. And then, it goes the way of other things where, it's in a hype cycle and it's going to go away, and then it'll be something else. It'll be, pick a new shiny thing that gets everybody some VC funding. So yeah, I think utility, it's really key you kind of pull that word out. So yeah, I agree. I think it's kind of interesting.
So utility, we talk about now payment tokens. Give us the really high level overview. What is the vision of the utility, not only behind your guys' stablecoin, but also with how you envisioning Rain tying into utilizing this stablecoin in I assume mostly in emerging markets?
Yeah, so it's a really good question there. And I think you have to take what we're doing not just in silo with Rain, but as an overall program in stablecoin. So there's really three key components of this. And one is issuing our own stablecoin, like the USDPT. So there's a couple of big reasons to do that. So one is obviously that optimization and that liquidity on a digital asset network. It really works for us and that runs for us. So today we move huge volumes of fiat, hundreds of billions of dollars of fiat, and really being able to optimize that in that 24/7 motion. And then when we're not moving the actual currency, peg that against yield, that wins in itself. So you take that and that's where you start. And then that gives you the economics. And the economics are important because as a big organization, you start with the economics. You say, okay, if we do this, we spend time and effort on it. Is there some general payback? Is it, is this really just a hype cycle? Are we really just jumping into it because everyone else is and we get some nice press from it? No, this has real economics and optimization utility for us. Then we start with the distribution side. So we know stable coins, you have to have the distribution, you have to have the consumerization of them because you get more yield if they're used and if they're held. So again, it drives that cycle. So for us, there's two programs there that we look at. And interestingly, with Rain and others, one of them is we're the supplier to Rain, which is kind of an interesting thing. So we have this digital asset network where we solve the last mile to cash, both on and off. So if you think about the crypto space today, getting cash out and into the network there's delays. You're now at some point, you've got this fast moving digital asset or a stable coin or a payment token, whatever you want to use. And then you have to put it through the fiat network. You have to exit to your bank. You have to real-time rail it. You have to debit card it. You have to tap to pay. Whatever that mechanism is, cash is the most liquid commodity, and it's quick and accessible. So Western Union, we have this agent network, which is 150 countries, over 400,000 endpoints, where with that digital asset network and the last mile in the Rain partner wallets and other wallets, you can pick Western Union as your exit ramp and then simply walk into our store, show your code, and then you get that cash. Same with if you want to bring it in, you can pre-stage in your wallet and say, hey, I need to load up my wallet because I've got this great option to buy Bitcoin today because it's just gone down and I really need liquidity right now. I can walk into a Western Union and pay that into my wallet. So that digital asset network gives us some of that distribution. Those customers today are not necessarily Western Union customers, they're customers in the crypto space. And you know yourself, Western Union, because we don't have crypto products, we don't do crypto wallets and buying and trading of crypto, we don't really appeal to that market for that specific use case because we don't have it. So that's a new market, new use case with a new set of partners like Rain. And the last piece, which is the exciting piece with Rain specifically, is the stable card. So again, I have a set of consumers, over 100 million globally, and they move money around between each other. The ability to say, hey, you can now in certain regions where it makes sense for you, hold US dollar denominated, payment tokens in a wallet and then spend it with a card in local currency is actually very valuable. So if you take countries like Argentina and others, because we can't talk about specific countries, there are use cases there where I want to hold US dollars until the currency locally increases or decreases, and then I want to exit. Now, for me, if you're holding that in the wallet and then you're exiting $100 leaves. So that's not usable anymore in the Western Union ecosystem. I stop earning yield on it. If it's on a card, the burn is much longer. So you're tapping that card for smaller purchases. That $100 actually burns out longer. So you get better yield, you get better turn of the ecosystem. Equally, from a consumer point of view, if I have the ability in the wallet to say, every time Malcolm sends money to me as Zach, I can simply say, load it to my card, and there's no interaction from me, and it automatically happens. You've taken friction out of it as well. So it happens in real time. Zach needs money now to go and pay his phone bill. It's there. It's on his card. He's in the store. It's like, fine, I'll send it to you. And you just tap your card seconds later. That is actually incredible utility that stablecoin networks and those things actually open up to my consumers. So they're kind of the three programs we're working through. They're the programs we've announced. Rain is obviously helping us with that stable card piece, and we're very excited to work with them.
It's funny, as a US consumer, even I've come across that barrier of, hey, I have stable coins. Like I said, maybe I cashed out some positions. I didn't want to go to a bank, but I'm going to an event and it's cash only. Or there's something that pops up on Facebook Marketplace and it's cash only. And when you look at the options, it's either been, yes, you can use some of these cards at whatever ATM. And then the fees just go absolutely crazy. Or like you said, you go through this, okay, now let me send it to my bank. Now let me wait for it to settle my bank. Let me go get the cash out. But you mentioned earlier going through, when we talked about identity and compliance, especially this cash to crypto, how does that work? Is it that you're already KYC'd and there's a certain deposit limits and you're providing proof of funds? Is it a similar flow as if you were going to a bank? Because I could already see a lot of people that are already skeptical of crypto being like, oh, well, now they're going to allow them to money launder cash just, straight into Bitcoin. And then there it goes, using the criminal currency again.
Criminal currency. That'll be a good name of a coin, legal criminal currency. I'm sure somebody's going to do that. No, please don't do that. That would become...
please don't.
So no, look, it's really interesting. And I think it goes into why now with stablecoin for an organization like Western Union. There's a couple of things, especially in hype cycle things that you look at. You look obviously at technology. Is it new? Can it deliver? Is it, somebody's pipe dream? And I think, as we started this conversation, crypto blockchains, they've been around for a long time. Like we've been playing with them for years. Ethereum is a very good standard. Solana is a great standard. They've gone through pain. They've got out of that side of pain. There is some reliance on them now. So the technology problem is a check mark. Like you can believe in that space. And then secondly, consumerization of this and where it can go to solve those true use cases. You have a check mark there. You can find and see those use cases either now or on the horizon. You can feel by doing this, you open yourself up to more use cases and you have the ability to meet those needs of the consumers as they evolve in a digital asset or payment token environment. The middle one, which is really important, is that compliance piece and that regulatory piece. So the Genius Act gave some legitimacy to this. And it says, okay, we now have we have a guiding framework, and we have guidelines that we can point to. And, my friends in the legal department and compliance department, they like their guidelines and they like their frameworks and they like keeping us in those guidelines for safety. That then applies to those guidelines extend to things like know your customer, anti-money laundering. So within our networks, DEM, for example, the partners like Rain and others, we help them and we ensure that they are doing the KYC AML requirements. Then when you make your transaction and you appear in the Western Union store, the code you have is tied directly to that KYC AML. And if they don't match, you can't exit. Much like a bank, you'll go through similar rigor of we have to know who you are and we have to know the purpose of your movement. Now, obviously, we apply limits to that. So you're not going to walk in a Western Union store, exit $500,000. I don't think my stores would. I'm sure they'd be perfectly happy and it's great revenue, but we don't carry $500,000 in the store, let's be clear. And it's certainly not to walk out with. So, that's kind of part of it. The other side of it, which is quite unique in how we think about it, we're not getting involved in those crypto transactions. So they're all done in the wallet. So the burden is still on the wallets of Rains and others where they have to ensure their customer is transacting correctly in the crypto. They have to ensure their rigor and things are there so they can be Genius compliant and they can be compliant in those spaces before they exit. So we are really just the last mile of the exit to say all the crypto transactions happened and you're just picking one of the exits in your wallet today, much like you would do with your bank or your debit card. Like it's happened pre-staged to that. So that's kind of how we think about it. But again, the Genius Act has given some legitimacy to that and it gives us frameworks that we can, we're comfortable with, because again, if that's not there, then you're always worried about regulation coming in later and you've spent all this time, effort, you've got consumers moving on it, you've made bets and then regulations come in and you're like, oh, we have to back those things away. So that's kind of the reason for doing that.
Yeah, that's interesting. So now I'm curious about like, what did this conceptually look like? Like, obviously you came in Western Union 6 months ago, we're a few months now into the Genius Act. That's obviously been, years in the making. Where's Western Union, like in your full vision of stablecoin, on-chain finance, future of money movement? If you even had to put a percentage to it, are you 10% of the way? Are we not even, we can't even put a percentage on it because you're just getting started? Where do you feel like you're at with that journey?
I feel like I need more sleep. It's been very busy. Let's go there. So we're well into the journey. So we're well past any proof of concept. So for example, DAN is not a proof of concept. It's not something, the digital asset network, we call it DAN because it gives it a persona. So the digital asset network, or DAN, it's not us trying and testing something. DAN is based on capability we already have today in Western Union. So we already have a network today where as an institution, you can come and use our last miles, and extending that to the digital asset network and the crypto network, we're more than well into that. We have partners like Rain already signed up. Those partners are bringing very quickly scale to that network. Their Rain partner other wallets, the other partners partner other wallets. We're going to some of the big wallets and the big players as well, where they're able to bring scale quickly for consumers. You can certainly foresee, and we've announced by H2 next year, that the digital asset network there, and when those wallets start implementing the Western Union APIs, they will be available in wallets, and you can then use those exit ramps from that point. And there's a roadmap behind that of, them being able to use the digital network we have, because Western Union just doesn't have a cash network. We have a digital network of connected banks. We have bank licensing. We have our own wallets and things. So extending into that ecosystem over time as well kind of brings that, bridged from fiat to digital and back, because we know it's not just a one-way bridge. Like fiat really does you talk about a stable coin sandwich, like there's a fiat sandwich where the stablecoin is in the middle and the fiat's either side still, because, there is real money in the world. So, that's real and that's there. The stablecoin, we announced we partnered with Solana and Anchorage Happy to talk about why we selected Solana and
I'd
Anchorage.
love to go down that route.
We are, again, H2 for that. And, that's well underway. Far too much time in my days spent, on that stuff. But, we've selected those two. They're great organizations, and they're helping us through that journey of the US dollar payment token. And then in the stable card side, Visa, we're a Visa partner today. Today I support and do the card issuing for Western Union. So we issue prepaid cards, we issue debit cards globally in many regions. So this is analogous to what we already do, and we're just extending that now into that stable space with Rain, and leveraging their APIs into where we have wallets and using them for where we don't have wallets against our money transfer business. Again, these things plug in directly to what we do today. So, these are really augmenting what we have for consumers. They're giving capability to the things we already do. They're not supplementing things. They're not replacing things. We're not having to rip and replace, hey, all of our money transfer is going to go onto this rail, so we're just going to turn it off and turn it on. That's really not the case or the need to do this. And I spoke before about having economics and distribution. We're pretty unique in that as Western Union, where we can add these capabilities into what we do today for consumers without having these big technology builds or having these titanic shifts in approach or turning the ship mid journey. Like, it really doesn't apply to us.
No, that's interesting, because I think for a lot of people, when they get into the space and then they start going down the rabbit hole of like enterprise adoption, what's it going to look like? We think it's going to be this like massive migration and it's all going to go there. And you're saying that it's more supplementary, complementary, and they really building this network that works together to make the consumer experience better.
Yeah, look, it's a really interesting way of thinking about it, because if you would ask me 6 months ago, I would have been like, it's all going to go token. We're going to token gold, then we're going to token toilet paper, and everything's going to be a token. And then when you really step back and you get into an ecosystem like Western Union, you're like, hold on a second. The consumers we have today, they don't care what you move their money with. What they want to know is it's the best price. It gets there. It's secure. And the person you're sending it to, because they need it, it arrives. If you move it with NFTs, emojis, rainbows, carrier pigeons, they don't care. So that this is a stable coin or a payment token in the background, it really doesn't mean anything to them. Now, the receiver, some receivers, we know in certain regions, there is value in the US dollar pegged tokens. We're seeing people going into stores and spending Tether today. We know those use cases exist. We speak to our partners in Latin America and Argentina, and we understand those use cases. So on the receiver side, we see that journey changing for those receivers in certain countries. But again, it's certain countries. We're still very early into this journey, both as Western Union as the industry, where, that's kind of what happens there. So you take those bets and you say, we believe things are going to go tokenized. We believe, we get optimization by doing stablecoin. We believe we are able to move fiat better. We get better treasury yield. We do the things in treasury, which, by the way, has been in place for 100 years. So it really isn't a big step for us to say, okay, even if none of the consumer stuff is true, and this really is just another hype cycle, the optimization and the things we do on treasury actually makes this make sense. So again, because of that, it's not a really difficult step for somebody like Western Union and how we think about it to say the optimization, the fund movement, and the fiat piece is actually real. And we're already seeing today that the Circle network is moving. The CPN is moving USDC for remittance and offsetting fiat, and they have offers. And so it's already happening. So again, the reason to believe this is there on the treasury side. The consumer side, if you're not doing it, you don't have the option to solve your user needs, and you end up losing those users over time. So being in this and having that journey, actually, it links together quite well.
What would you say are the biggest, like when you're talking to consumer user needs, what are those right now that you were hearing in 2025, soon 2026?
So it's interesting. I don't think you can make predictions on this stuff. And I think for every prediction you make, you probably get none of them right. Let's be fair.
Yeah.
Like it's true. So I think I see in regions, as I spoke about, the holding of US dollar pegged token is a real thing. The spend of that is a real thing. That alternative currency is real. I see their users within the crypto space exiting into stable coins so they can then exit the networks and get the trade price on the crypto today and put into stable currency when they travel. They're real use cases. We know the industry knows, not Western Union, that a lot of the stablecoin movement, some of it's bot, some of it's not automated. That changes over time as big institutions join these networks. I personally know some institutions that have got huge liquidity starting to move into these networks. Some of them announced. So I think if you play those things forward and you start applying the crystal ball, you can see, personally think we'll get to a time where if I have to send money or I have to do something and I have a balance of crypto and I don't want to sell my crypto, can I margin against it like I would with traditional finance and
Yeah.
then use that in a way to buy? That's a different type of, you can call it credit. It's a credit.
Yeah.
In places where, and you think about Western Union use cases, we have these use cases of send now, pay later. So my paycheck hasn't dropped and, there is an emergency for my family overseas. I want the ability to send them money now, but my paycheck's in 3 days. And this is not something Western Union does today, but we've seen others thinking about it in the market and we're thinking about it. The ability to loan against your incoming paycheck to send now and pay it back later in small micro loans, much like when you buy a pair of trainers, sneakers, that
Yeah.
buy now, pay later. So you can see those use cases playing out where I hold crypto and I have my family has an emergency in the UK. Can I use my crypto to margin a credit so I can send it to them and then pay it back, or the crypto gets used to cover the
And it's
loan?
interesting because it's like, I was saying that it's interesting too, because a lot of that, infrastructure in a way, it's there if you want to go down the DeFi rabbit hole. And I'd agree with you that in my head, that's, it's funny that you talk to I talk to friends and family. A lot of them don't even know that you could do that with, in their SoFi account, that they
Right.
could, margin their positions, or they could margin their 401k and then take a loan against it, especially when you talk about people wanting, and so their Bitcoin positions, you see it all the time on Reddit, and it's not even something that comes to mind. And I wonder if it's because of an experience, it's because of the way it's been presented. Even buy now, pay later, that's been on the rise in the past 3 or 4 years. Is it because of technology? Is it because of the way it's being presented to the consumer? I'm interested to see where that goes. Even as, like you said,
I think all of these come down to the specific use case in the ecosystem. So again, if you apply, knowing what your users are doing is quite important. So if I was to go to my user base and offer buy now, pay later to go to store and do things, yes, consumers will take it. But the use cases you're looking at here, you're saying, look, we have the technology, we have capability, we know it's available to say, okay, we're solving an absolute need of I need to send money now and I have a gap in funding. And, I don't want to exit my crypto because, it's just dropped today, or I'm kind of waiting for the next cliff and I want
yeah,
the next, the like people who hold crypto, they're pretty savvy with how the crypto space at the moment. But as it starts consumerizing, you kind of see that playing out. And I think that's a very small use case. And I think other use cases, I do think the stable card use case and the spend against US dollar backed currency or euro backed currency in markets where they don't hold it, that liquidity of having it available means consumers understand it. So today, if you speak to consumers in any space and try and explain a stable coin, they gloss over like, oh, it's pegged to US dollar. Well, what is pegging me? Like it just
yeah.
it doesn't
Well, they're
link.
the dollar.
Yeah, so I'm like, in my mind, I'm already playing through the concept of, hold on one second. Our mechanism today for sending money is I'm going to send you £50 in the UK, you get £50. Tomorrow I'm sending you $50 and you see $50 in your wallet. You have to do mental math of what that means when I spend it in store. So I go into the store and I buy, a loaf of bread. I'm like, well, that £1 is worth, $0.75. So I've got, $43. Nobody's doing mental math. Like we don't do that anymore. There's some barriers of solving in UIs and things of that dollar is a US token dollar. It's worth this equivalent currency. And when you spend, you see the equivalent currency going down, US dollar going down at the same time. In the UK is probably the wrong example. Pick some other country where Argentina or others are going to do that. So I think the consumerization of this is going to be important, and those UIs and those things to really soften the technology away from the user is going to be important for this to take, really take hold in a big way. And you see that with other things that really don't take off, like buy now, pay later is part of your checkout process. Like you're sat there and there's an offer instantly in the cart that says, hey, you can spend $300 on your Nike trainers, or you can spend, $50 a month for 4 weeks or 6 weeks. Can't do math. It's right in your face. And you're like, well, $50 today or 300. It's free. There's no cost to this. I'll do it. Like it's kind of interesting. And then the economics behind that is the retailer pays for it. So you've got to solve the economics as well.
You mentioned this earlier. We're coming up on time. So I know I'm looking at the clock right now. I was like, we got to talk about Solana. I want to talk about the stablecoin. How does an entity like Western Union approach not only stablecoin issuance, but also the chain that you're going to issue and operate on primarily? Where do you even start?
So like you start where you have knowledge as an institution. So as institutions, we spend an enormous amount of time picking technology, for all sorts of reasons. So Solana and Anchorage are technology decisions, and they're based on what is the need we're trying to solve. So I think if I was a startup and I was a small, starting out, my approach would be very different. It'd be like, hey, maybe I do a coin auction. Maybe my use cases appeal to the blockchains and they're going to give me some funding to help me get through the stage I need to get through to get onto the chain. We're an institution. We're not in that position. We don't have to go and do coin auctions. We don't have to go, well, okay, who's going to pay me the most money? That's really, I'd love to do that, but we don't need to do that. So we start with the premise of technology fit, a use case, and then really fundamentally the lifetime of Solana, where is it going and what is it doing on roadmap? Does it match what we want to do? So, a couple of great examples, blockchains are relatively the same. They all have speed, they work for use case, they do the same things. They've all got great flow. We're chain agnostic. So Solana is where we're starting, but as we grow, we're moving, we have lots of use cases. We'll do Ethereum, we'll do other things. So we started with Solana, and key reasons are their roadmap around how they have extensions and how they're looking at privacy in chain and how we can actually, in the smart contracts, remove certain things. They appeal to institutions. So again, tracking of the actual tokens and the actual movement of smart contracts for big institutions are a little bit nervy about some of those things. So being able to use extensions and mask some of that information is really important. The other side of it is that innovation piece around that is super where we want to go there. In terms of the coin piece and why we do our own coin and Anchorage. So Anchorage are an OCC regulated bank. They're an institutional bank. We've worked with Anchorage in the past. They just fit that compliance piece where we are, the comfort around compliance. They make a great partner. Again, there's plenty of partners out there that, will fit the needs of everyone, but Anchorage is where we start. And the reason we pick our own coin on the back of that and not use another coin and you can pick the name of any of them is, and I use the analogy, if I was going to go and buy dollars from a bank and they then put a bunch of rules on that dollar that I can't control around spend, or they can change the rules on the fly, I'm less likely to go and use that dollar. Same with coins. So controlling, the contract, where that coin goes, how it goes there, the future of it, the compliance of it, all of those things that we need as an institution leans into why we would do our own coin versus leveraging someone else's, where the market controls it and the openness controls it. Like, we're not in an open market as an institution. We do need some controls for compliance. We do want to, create use cases and benefits for customers. And a good one, as an example, I'd leave you with, by earning yield on the coin, if you use my coin to exit in my last mile, I can give loyalty. I can program discount in that. If you hold it for a certain time, I can give you something on the backside of that. So again, just that use case alone, and you apply that to, why would you pick Solana? Why would you issue your own coin? Why not go down another path? Those use cases are not supporting. So again, from an institution, the way you pick technology, you start with, technology fit, innovation fit, use case fit. And then, the RFI processes and things that you do behind that. So it's very different than a startup where you're like, okay, this is my idea. I need $5 million. Let's auction this. That's more fun, by the way. I'd love to do that. That's so much more fun than my process.
It's a big paradigm shift because you look at this, the hyperliquid stablecoin proposal a few months ago, and everybody was so hyper focused on, there's so much, there's so much volume in USDC. Imagine how much money hyperliquid would go to and how much hype buybacks there would be. And when yes, the economics are important to a degree, you're almost saying, though, yes, we care about that. Of course, we have to make money, but what's more important is privacy and control.
Right. Like, I go back to my original statements when we started talking. My internal optimization and treasury use cases, remember, I move around $100 billion or in excess of $100 billion. That in itself on fiat, it has cost on it. There's the optimization of that alone means, and look, I think PayPal and we can talk about others, PayPal are very similar. They don't need anything other than their own internal optimization use cases on their coins to make them successful in the realm of they're successful from the economics point of view. Yes, we're building something that is open for others to use. Yes, we want to put it into the stable cards on the Visa network and settle through those things. Yes, we want to do the consumer stuff. That is critical to our strategy, and that's how we meet the users where they are globally as we evolve as a company. The hedge and the bet is not that big when you really take the optimization piece as your first tenant in this principle versus the hyperliquids and things like they're starting from, I don't have a balance sheet today, so I need to build my balance sheet. I need to build my deposits so I can take my yields. And then with my yields, I can go and do things like Circle is very similar. Like the yield drives our innovation. They buy ARC and they do these things. We're very, very different in that respect. And institutions generally are different from that respect. I mean, you can see the big banks moving into this. They have liquidity, they have yield, they move money. They don't need to go and create money and market to get money into our ecosystem. So that means we can pick technology differently.
So on the point of picking and privacy, last season we got to talk with Shiraz from Solana, and one of his big calls at the end was privacy extensions are probably in the realm of stablecoins one of the least talked about, but most important things coming to Solana. What do you think people get wrong about privacy and blockchains and how impactful it'll actually be?
So I'm laughing because, I started this journey from a digital asset network where privacy by design was like the rage. And we all talk about we want to protect the consumer in a two-sided network. It's still true. Like I think from an institution point of view, it's very difficult in an institution when you're moving the core of your business around if people can see that. You're a public company, disclosures are a thing, and the privacy aspect is very important as it moves down the institutional chain. And it's not because we want to hide what you're doing as an institution. You just don't want to expose what you're doing because it can have risk and it can, market impacts and various things. And that's where regulators start getting upset because, like, hold on a second, you can start seeing what public companies are moving in terms of volume of funding. That can have market driving impacts. We may start regulating that stuff. So there's a regulator aspect, which is probably a bit tenuous as a connection. I think the second side is the crypto space and how it's grown up. You mentioned it yourself, the criminal coin, I want to exit through the back door of a restaurant down a back alleyway and give them 30% against my dollar because I just want the cash and I don't want to disclose. I don't want people to know what I'm doing. I think we've evolved from that in most part. I think, yes, that's still in the networks. It's still there. Privacy for us isn't nobody can ever see it. Privacy is we're going to mask parts of those transactions, and the transactions that need to be unmasked because lawful requirements or regulator requirements, we can unmask them and show them to those that need to see them. So privacy isn't about hiding everything. It's about hiding it from the people who shouldn't see it and being able to show it to the people who need to see it under the reason they need to see it. So it's a very different concept around, the original crypto theory of I just don't want to be tracked. I want to have complete anonymity. I want to do what I want to do and I don't want anyone to see it. And it's not like, you heard some of the podcasts like the darknet stuff and things where Jack's very good at being like, hey, privacy is important and your data's out there and you should do things, nobody should own your data. I agree with all that stuff. That's not the same as this. This is not that. This is institutions saying, hey, we have market risk here that we need to protect, ourselves and shareholders from. So I think you've got to put them in the right camps. Like it's not personal privacy. This is institutional privacy. Like you wouldn't trust an institution if every time you transacted with them, they displayed it on a board.
There's a big tweet goes out.
Yeah, they tweet every transaction you do.
$1,000, guys.
Because Venmo, I use Venmo and I tease
Venmo,
friends.
Yeah, I don't.
Venmo is amazing. So I will pay friends and it'll be like, paying for lunch or coffee. The things I put in there, I'm paying them for because they publish it on their feed. Yeah. It's awesome. It's like every single time we'll cause a phone call, they're like, dude, please do not put that on my Venmo feed. I'll keep your Venmo private because I'm going to do it. No, so yeah, it's interesting. But again, I think institutional privacy is a very different lens that you have to apply to these things.
Awesome. Any big picture thoughts with Rain, with Western Union, with stablecoins that you want to leave the audience with, whether it's somebody that's seasoned in the space or just coming into it?
Yeah, I think, there's a couple of ways that I personally look at this. We're starting we're early into our journey for sure. And we have the foundational building blocks, both in Western Union with partners like Rain and others we spoke about. We're building I come from the premise that this is an open network. This is, multiple blockchains, multiple partners. Openness is important, but it's got to solve the use cases. So again, Western Union, where I'm sat today, is awesome because we have economics, we have distribution. It is perfect for that. I think as others start looking at this, they really should look at how they drive those two sides of that divide, because it's very difficult in any ecosystem to be successful if you don't drive the economics, you don't have the distribution. Because if those don't align, or those use cases don't align, then whether it's stablecoin or emojis or NFTs, it's very difficult to be successful. And I think, players like Rain, Solana, Anchorage, others, they help align those things with those technology stacks. So stable cards is a great alignment of economics on the right, on the left. I can't remember left and right today. And, stable card for the consumer on the right. And those economics solve the need for the consumer where they have that need and they want it. And then the economics flow through where you can then leverage that to solve the other consumer needs as they arise. So that's kind of the thinking around what we're doing in the strategy. And, I'm excited to see where we end up in the next we move at a really fast pace. So 3 months, 6 months, 8 months, it's a journey.
Yeah, no, I'm excited, and hopefully at the next international conference I'll go to an ATM. I'll go to Western Union and get out my cash, hopefully in Dubai or something.
Yeah, let me know. We may be able to send you some codes.
Awesome. Well, thanks for coming on Stableminded, Malcolm. It's been great talking. Hopefully we'll have Stable Dash live in the future. Maybe we'll come on and get an update in a few months as well.
Yeah, absolutely. Love to. And thank you, Zach. And appreciate your time. Awesome conversation.
Yeah, thank you.